Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Friday, September 21st. We did have a nice gap down lower, and that was due in part of Norfolk Southern missing and guiding much lower into the next quarter, as well as Bed Bath & Beyond. As we all know, that's another top retailer having difficulty, and no surprise there. It wouldn't surprise me that they would have difficulty. The economy is clearly slowing down. I don't see much of improvement. However, with the Fed and the stimulus going on throughout the world, you're going to have this fake move basically into stocks, because stocks are the only place to be, and that's what the Fed wants, right? That wealth effect. So markets dip lower. It did accelerate the first half hour, 40 minutes, and then just had a slow grind with a flag in the middle of the day, and then a grind into the close, filling this gap area. Now, we have options expiration this week. There's no econ data today. So I did mention, I think it was yesterday or the day before, that usually the markets are bullish. And especially on a low volume Friday, the markets would generally just drift higher on no volume. Especially with options expiration, the large houses are selling calls and puts. They want them to expire worthless. So they're going to keep the market in check and in tune here. For at least today. Next week is a whole different ball game. I would be really interested to see what happens next week, and if we continue our move higher. It's the markets are in a conflection point. I showed you a lot of the indicators. There's really no change, so I want to get right into the charts, and I want to show you what I'm seeing. As of right now, I'm seeing a lot of bullish setups in reference to bull flags. Now, that I mentioned a few days ago, that can we go higher? Absolutely, we can go higher. Should we be at these levels pre-2007 crisis? Absolutely not. But the Fed wants us there, and you cannot fight the Fed. However, you can use extreme amount of caution while you're trading. I just think that there's a lot of risk out there still, and once we have our focus out of Europe and all eyes will be on China, then I think you're going to have another catalyst to the downside, which would probably be bought into the new year. And that's what I'm really waiting for. There's not a lot of great setups out there for an active trader, unless you're literally constantly looking. But what happens is, when you're looking for catalyst, and you get a catalyst here or there on news or earnings or downgrade, it happens so quickly that by the time you look and you get to that point, you look for the next setup, it's gone. So I just wanted to make that clear, make that a point, that even though you can say, hey, I'm looking for news and I'm trying to find a catalyst, but yes, when that happens, markets are so fast, it's already past you, it's gone. So just a word of caution. No need to jump in right away. Keep the pallets dry. Markets are going to make a really big move, and I see it. I see with the price action, and after this move is completed, and make certain that tops take a while before bottoms are in place. So we just make sure you realize that markets don't be overly bullish, because we are at extreme sentiments. I mentioned that many times this week, and I just want to make sure I get that word of caution out there. So let's get to the charts. I want to show you this 5-minute chart. Show you we had that last Thursday, that big move up, and then we just really flagged on low volume, and it is bullish. And we did manage to bounce up 2 days ago, and then we had that sell-off, and that was also in part with the China, the HSBC PMI, again contracting for the 11th straight month. They ignored it, and they ignored Norfolk Southern again. But you can't ignore bad news for too long, right? Right now, bad news is good news. Good news is good news. And I hate to sound funny, but it is so true. So until that happens, you cannot fight it. And I wouldn't want anybody just overly getting short this market, because you can lose a lot of money being short way up here still. So just keep that in mind, okay? We take calculated risks, and the reason, and right now, being long and or short is risky, right? Because anything can happen overnight, especially at these levels. All you need is the sell button hit one time, and everybody's going to run for that one door. And when that happens, it's going to be really hard to get out of stocks. But we can trade, and we do trade intraday. And if there's nothing to be seen in what you're looking at, what your focus is, then just move on. Just sit on your hands and wait for the next opportunity. Several good trades makes the day and the week. So just remember that. Keep that in mind. We don't have to be overly active when there's not an active market. Okay. All right. Anyway, enough of that. I just wanted to really make that point. Now let's take a look at the S&P 500 weekly chart. I showed you this the other day, and I said, could this be an overall big bear flag? And yeah, absolutely it can. But that bear flag doesn't trigger, and we want to trigger on everything that we do until it breaks the lower trend line, and that's a long way out. So this bear flag could just continually grind waves within waves until we get to that point. Now, if you look at this upper trend line, we run right into this area here, which is the post 2007 high. Okay, so plenty of room to run, as well as what overboard state we are. Overboard, we can continue to be overboard for a long time. So just really, keep that in mind. We could be overboard and we can stay overboard. Literally, believe it or not, we don't have to have a pullback into the new year. Okay, what am I seeing? I'm seeing flags, bull flags all over the place. And I'm looking at several indexes. I'm going to keep it brief, but we do have a bull flag here in our S&P 500 cash index. Bull flag. Now, what happens with the bull flag? We need to break out of the bull flag, and usually we do get a little bit of a pullback, and then we continue higher. Now, we overbought. We are still overbought here, okay? But we did unwind some of that overbought into our momentum 8-day moving average, and now we just need to break out higher. And literally what this has done is gone sideways to slightly lower in the consolidation phase for the last 4 days. And it looks like today we might be breaking out higher if the futures hold. Okay, bull flag, daily S&P chart. Let's take a look. Let's dial this down. S&P 60-minute chart. If you remember, beginning of the week, I said, look at this little bull flag here. This could it be just flagging? This was in the beginning of the week, and I said possibly. Now let's just take an overview of the week and look what's happened. A nice bigger bull flag of the last 5 days. Okay, and we had a little bit of retracement of our moving averages. Remember one thing. When you're looking at setups and you're looking up trade setups, whether it be bull flag, bear flag, rising wedges, or symmetrical triangles, the setup itself will take precedent over what the indicators are doing. So, because why? Price is king, right? Price is what pays us, not what the indicators are secondary to price. So let's make sure we understand that and we realize that. S&P, spiders, bull flag. And obviously, why wouldn't you see that in the cash? You would see that in the spiders. But a little bit better volume yesterday. As you can see, but volume picked up, recovered nicely, and we're still hugging that 8-day moving average, which is a little momentum index telling us where we are. 20 days way down here. So bullish, bull flag again. Dial it down to a 30-minute. And if you remember, I said, guys, watch, be careful here. We have our Bollinger Band on a 30-minute pinching again. We don't know. Again, this doesn't tell us which way. But we did have a nice big move out of the Bollinger Band. Now, that is oversold. When it gets out of that Bollinger Band, that's oversold. And when we close back in the Bollinger Band, okay, for the day, that's bullish. So denying it, whether it be bullish and you're a bear, this is bullish. Everything here is bullish, or what I'm showing you today. That does not mean that it can't change next week. But for today, for Friday, I would be looking for buying pullbacks in an uptrend. Now, this is what complicates things and what gets me a little crazy. Doing this for 24 years. Transportation sector. Now, there are only 20 stocks, and 3 of the major big ones actually were downgraded yesterday because of Norfolk Southern. I understand that. However, you can't deny that the leader, the transportation sector, is getting pummeled. This had a technical breakdown yesterday off the lower trend line, and to me, this here is not good. And I'm sorry, if the transports are saying, Norfolk Southern is saying, hey, we have a slowdown of delivering materials, coal, i.e., PVC, copper, something's going on. Why are we slowing down with our commodity, hard commodities? Is this because there's a slowdown in the economy? That's just the bottom line. Now, until that happens, until that grabs hold in the markets, you cannot fight the trend. And the trend is your friend, as always, and we need to say be vigilant. Now, if in the old days, meaning 6 months ago, if that makes any sense, I'd be say, wow, I'd be look to short any rallies. But not the case now. You have the Fed flooding $40 billion every month. It's not a lot. It's the lowest of the QE 1 and 2. However, it's still money that's flowing into the markets, and we cannot deny that. Bull flag, IWM, Russell, gauges risk. Good sentiment of risk, actually. Nice big day yesterday. We are overbought, but again, we can be overbought for several days, weeks on end. Bull flag. So you see repetitive patterns. bull flag in a lot of the currencies actually, and a bull flag in a lot of the indexes. This here is a bullish sign. Now it did have a little doji, but right into support. And if you look at our volume profiles on a lot of the charts that I've showed you, and if you look back, you'll see we're really light here. Our volume profiles are light, meaning that there's light resistance up to the top. So bull flag again, guys. Repetitive patterns are king. And this is a weekly chart of the Qs. I left the double top here. I'm going to get rid of that as well. But I'm going to leave that line here because that's our resistance line. And that double top never triggered. And if you recall, this is how, when I say we need a trigger in order for us to get into a trade. And I said here on this candle, this doji, I said 67.50 is our trigger. Now, we have not closed there. 1, 2, 3, 4, 5 weeks now. We have not closed below that. That means you would not be short the market. You would not be short at least the Qs. Okay? Good. Last week, now that's going to put us into an indecision candle again as well, but we'll see what happens next week. But as of right now, there is no sell signal in the Qs in the weekly chart. Daily chart, we'll wrap it up real quick. You can see here, just literally sideways to consolidation up. Lesser volume. Qs weren't as strong, yes, and that's also, again, given the fact Apple really didn't really do too much. Actually was down lower. So be really, really safe today. No sense going crazy. There will be opportunity. There's no econ data. There's options expiration, so it's going to be all technicals today. Or obviously unless something happens or there's some sort of a news announcement coming out of Europe. Okay? Be safe. Have a great weekend. Finish the week off nice and easy. There's going to be plenty of opportunity. And this right now, guys, believe it or not, I know it doesn't sound it, but this is the season right now, seasonality weakness. It doesn't have to happen, but if history repeats itself, the next 3 to 4 weeks technically is usually have weakness in the markets. Okay, now again that could be skewed and of course by the Fed, but let's just see what happens. Let's keep an open eye of things. Plenty of opportunity to come. Trust me when I tell you that. Have a great weekend, everybody.